buyers today have this very small window of opportunity to get a great deal, but it's closing quickly. I mean, there's a large demand for housing waiting on the sidelines for home prices to crash and interest rates to drop. Sound like you? I mean, in fact, Fannie Mae's most recent report showed 86% of those surveyed said it's a bad time to buy. I mean, that's the overall sentiment as mortgage purchase applications languish at levels not seen since 1995. Yet, we also see the size and frustration of this pent-up demand whenever rates move even a little. Last week, rates dropped from 7.11 to 7.03, and mortgage purchase applications jumped 9%, while refinance applications jumped an impressive 28%. Now, I would be remiss if I didn't mention that percentages are higher when you're looking at numbers as low as they are today. But if this is any indication of what we're in store for next year when interest rates drop more significantly, my question is, are you in a position to win from the move? Let's talk a little bit about what's going on in the housing market, as well as the Fed and the economy, because did you know that we have more inventory and bigger seller credits giving buyers today gifts they didn't see coming? This is something you need to know if you've been looking at buying your first home or even your first investment. In fact, I'm supporting more investors purchasing homes right now than I have in the last 6 months. I mean, it's really go time. But before we jump in, do me a solid and forward this video to that person who you know needs to hear this message. Because how would you feel if your friend stayed sitting on the sidelines not knowing what you know? Crappy. Yeah, me too. So share and comment down below on what you're seeing. Let's start with a reality check. It is not heaven out there. It's just not. I mean, rates aren't 3 or 4. Home prices aren't dropping to what they were in 2019, and sellers aren't giving it all away. But we just slid into a market no one's really talking about. In the month of May, we saw a smidge of median and average home price reduction. Sometimes we can chalk this up to which home sold during this month as compared to the previous month. But it's also a sign that the market could be shifting or slowing down slightly, or that some buyers out there are getting deals. We also saw 2% more of people who went under contract and 6% more who closed in May, which is both typical for this time of year. But the number that you should be keying on from the recent market data is there were 31% more homes available for buyers to choose from, 75% more from last year this time. Let's double click on that 9% jump in mortgage purchase applications we brought up a minute ago. That's 9% more people who did the work to complete a loan application, had their credit pulled, and submitted their loan documents last week as rates dipped a whopping 0.08%, while also they were able to take advantage of 31% more homes that came on the market. Now, meanwhile, word on the street is that buyers can't get under contract and listings aren't selling. I do feel this as well. However, maybe it's more about buyers fighting over the unicorn homes that are still selling for $10,000 to $100,000 over asking, or listings that aren't staged well or priced right, which aren't selling. Or it could be the fact that the number of buyers is the same count as 30 years ago when there were 75 million less people in the United States and 40 million less job holders. So in this market, my team just got a buyer under contract who received $60,000 in seller concessions. Like, no kidding, on a $1.2 million home. And this isn't super jumbo. Remember, this is Denver. These buyers are not only getting a screaming low interest rate, but combined it with a 3-2-1 temporary buy down to get an even better monthly payment for the next 3 years by stacking a permanent rate buy down in addition to a temporary rate buy down. We're also seeing buyers who are taking advantage of renovation loans because they have more time, or lower home prices or seller concessions to free up cash to close. Now, if you want the perfect home in the choicest of locations, you might have to pay for it, as you'll be up against multiple other buyers. But if you're looking for opportunity, this window was literally made for you. But it's closing soon. Here's why. Right now, interest rates are hovering in the high 6s to mid 7s as the economy continues to remain resilient. There's a daily debate and discussion on when the Fed is going to lower interest rates. In fact, as I'm recording this, the Fed is holding rates steady again at their June 2024 meeting. Consumers are spending a little less, but they're still spending. Jobs are still being created, and wages continue to rise. In fact, most recently from 4% to 4.1%, meaning employees are making a little bit more. But they've started putting that money towards all of that jubilant credit card spending, as credit card balances actually declined by $462 million in the month of April. Core CPI inflation increased 3.4%. which is still well above the Fed's 2% target, but 0.1% lower than expectations. I mean, all of this to say, we're not in a place to see a Fed rate drop yet, but we are getting closer. I mean, inflation dropped from over 9% to the mid-3s. Job openings dropped from 12 million down to 8 million jobs. And wages, which were screaming above 12% year over year, are down to 4.1. This last mile takes the longest. We need inflation at 2%. We need job openings closer to 7 million. And we need wages hovering around 3% annually. When this happens, rates will likely fall to the mid-5s. And mortgage purchase applications will look more like 2019 than 1995, which could result in an 85% jump in mortgage purchase applications than we have today. Think about that. What would it look like today with 85% more buyers in the market? With that many more buyers, the window that is open right now will close, narrowing your opportunity to negotiate and limiting the ability to tailor a solution that fits your budget. Goldman Sachs just released a report showing expectations for national home price appreciation of 4.4% in 2025 and 5% in 2026 and 2027. So instead of waiting on the sidelines, your investment today, refinanced when rates drop, and building equity as homes appreciate is the win towards building sustainable wealth and multiplying opportunity for years to come. If you want more information or you just want to dig into your numbers, call us at the Ruth Team for a no-obligation review. P.S. Let me remind you, who needs to hear this message right now? I hope you'll share this video with them. Nicole Ruth with the Ruth Team.